Well, it's been a roller coaster on Wall Street this week, with the Dow initially dropping more than 1,000 points at the opening bell on Monday. Now, most of us aren't day traders, but our retirement plans likely have a lot riding on the health of the economy overall. And to help us better understand what's been happening with the markets around the world, the short and long-term implications for all of us, we've called on Dave Spano, President and CEO of Annex Wealth Management. Great to see you again, Dave.
Thanks for having me.
Well, let's talk about what's happening today. Obviously, we had the scare at the beginning of the week. We had actually a week ago, really Friday. Then Monday was ugly, and then things sort of came back here middle of the week. What's happening right now?
Well, right now we're down about 100 points, and the market did move slightly after Vice Chairman of the Fed spoke today, and he said we are data dependent. We'll look at what the data is and make a determination if we'll change interest rates or not. That immediately changed the direction of the market.
I think people always want to know why, and some of it's witchcraft and figuring out what's going on there. But a lot of this has to do, everyone is saying, with what is happening in China right now. There's
no doubt. So China is the second largest economy in the world, and so we watch that very carefully, because if they falter, that could come over into our size. So what we look at is things like the oil prices. And oil, for example, dipped under $40 a barrel. Now, that's good for us because that drives down gasoline prices, but it's also a measure of their economy.
Let's talk about the individual investor. Let's take somebody who's maybe middle-aged or even younger, who's invested for the long term. Anything in particular those investors should do when you see this market fluctuation?
Well, there's been a lot of volatility. Perhaps not this last week, we saw almost a 10,000-point swing back and forth, and that makes it unnerving. But if you think about it, we haven't had volatility. In fact, we just went 46 weeks without a correction, and that's the third longest in the last 50 years. So volatility has been down, but we saw it over the past week. You should understand that the market doesn't go straight up. So we think that there's volatility in the short term, and it may continue next month, because there's a lot of things going on. We have, of course, China. Greece is going to be back in the headlines, and the debt ceiling discussion is going to happen. So going into the fourth quarter and next year, we are positive of the market. But if you're invested for the long term, Vince, what you have to do is make sure your asset allocation and your risk align with what you're trying to do.
Now, speaking of that, then, certainly if you're closer to retirement or you are in fact retired, there are different rules for what you're going to want to do, and this affects you differently.
No question. So if you are near term, if you're going to need the money in a year or 2 years or 3 years, you have to shorten up your risk tolerance. If you're invested for 5 years or 10 years or 20 years down the road, you can take more risk, obviously, because you have more time to recover if there is a correction.
All right, Dave, great to see you. Good analysis as always. And if you've got a personal financial question you'd like to run by Dave or any of the folks over there at Annex, you can check them out online, the Wealth Management website. We've set up a link on our site, TMJ4.com. Quick look